Now, Ghana is currently carrying an outstanding Eurobond debt burden of $13 billion, which started piling up in August 2013. Now, hello, my name is Isaac Kofi and welcome to Talk It Numbers. Now, government of Ghana is expected to pay outstanding Eurobond loans worth at least $7.9 billion in the next 10 years without a debt restructuring. Now, according to data contained in the 2021 debt report released by the Finance Ministry, 9 of these outstanding Eurobonds maturing in the next 10 years could cost government at least $7.9 billion, with about $3.7 billion, which is 41.1% of the total amount expected to be serviced in the next 5 years. Now, less than 2 years after Ghana became a trailblazer as the first country in Africa to issue a zero-coupon tranche Eurobond, the country has announced its intention to already suspend payment on most of its external debt, including Eurobonds, to pave the way for a $3 billion package from the IMF. Now, according to the 2021 debt report, total external debt servicing, including principal payment, interest payments, and charges on government debt servicing for 2021 amounted to $2.2 billion, compared to $2.6 billion in 2022. This represented a decrease of $401.8 million, which is 15.4%. Now, a few months ago, Moody's downgraded Ghana's long-term sovereign bonds to further junk territories, which brought the total number of Ghana's downgrades and revisions to about 7 in less than 11 months. Now, exactly a year ago, Fitch was the first to drop Ghana's sovereign bonds rating from B with a negative outlook to B- with another negative outlook. Now, in less than 3 weeks, Moody's also followed with their first downgrade. S&P was next to follow through in August. Now, Ghana has since then experienced different downgrades and revisions, with all of these downgrades conditioned on the current economic crisis. Ghana could not go back to the Eurobond market to borrow. Now, its currency has lost value against major trading currencies like the dollar, the euro, and then also the pound. Inflation is over the roof and cost of borrowing is swallowing businesses. Since 2013, Ghana's economy has been surviving on inflows from the Eurobond market, and being kicked out of this market brought thick darkness to the country's hope of surviving a bankruptcy. At this point, there is no money from the Eurobond market, no money from local bonds, and investors who would want to lend to us are raising their interest rates. Even the IMF doesn't want to lend to us at a 0% rate. There seems to be no hope, and an economy worth more than $75 billion is now hoping to survive on a $3 billion bailout package from the IMF. We look around as a country and default is everywhere dense.